get us all, honey. You get a whip and I get us all, babe. You get a whip and I get us all. One good trend pays for them all. Honey, trade a baby mine. And what do we do when we catch a trend, honey? What do we do when we catch a trend, babe? What do we do when we catch a trend? We ride that trend right to the end. How do we know when our risk is right, honey? How do we know when our risk is right, babe? How do we know when our risk is right? We make a lot of money and we sleep at night. What do we do when the price breaks through, honey? What do we do when the price breaks through, babe? What do we do when the price breaks through? Our stops are in, so there's nothing to do.
Thank you, Vishesh. We'll start shortly, folks. Couple of minutes. Yeah, and happy Christmas to everyone, and to you as well, Vishesh.
What do we do when a drawdown comes, honey? What do we do when it gets real big, babe? What do we do when it's even bigger? We stick to the plan and pull the trigger. What do we do with the hot news flash, honey? What do we do with the hot news flash, babe? What do we do with the hot news flash? We stash that flash right in the trash.
All right, folks. Well, that was the Whipsaw song, my variation of it. I hope you enjoyed it. By the Trading Tribe, Ed Seikota and his band. We're going to start in about 3 or 4 minutes' time. I'm just waiting for everyone to come in. Hello, Vishesh, the gas giant. And happy Christmas to you and yours and everyone in your purvey, I suppose. So happy Christmas and happy Christmas to everyone else. It's going to be a slightly shortened session today. Because everyone's on holiday, including me, and but I thought we'd update ahead of next week because there are a few things that will be moving. There'll be a holiday on New Year's Day, which is Wednesday or Thursday, I think. Thursday, I think. So it's going to be a little quiet next week too. But you know there will be some things moving, and I thought last week would be quiet. It normally is in the Christmas week, but we saw loads of stuff happening. Particularly in metals and some movement on energies too. So yeah, hello Emil, Merry Christmas to you. It was a good tune, Vishesh. I'll give it to you in the private group. I'll give you the copy. It's my variation of the Whipsaw song. Yeah, so Merry Christmas, Emil. So folks, we will start in 2 or 3 minutes time. Get your questions up. Please make sure to like and subscribe whilst you're here. The buttons are just below the video. There's one that says subscribe. There's one that says notify. There's a bell. Click the bell because that will make sure that you get notifications when I put up new videos. And when Paul puts up new videos, there's a video almost every day except for Saturdays. So if you'd like to get notifications, subscribe, press the bell, and you may even consider joining the channel for a couple of bucks too. There's a join button below, and that gives you access to the midweek Wednesday video too. I'm not going to say anything more about that. We're going to get into the charts and the comments about the markets. So make yourself at home. I'm not sure if there'll be many people here today, although I can see there are a few in. So good day, Amit. Nice to see you. So it might just be a quiet old session. Most people will be still on holiday, I guess, traveling or with families, celebrating Sunday night on this week of Christmas and New Year coming up very soon. So exciting times, and 2026 awaits us with all of the market opportunities that lie ahead. I think there are going to be a number, quite a few, in 2026. And I'm not the only one. And we'll read through some of the notes I've got up shortly. So grab a copy, sit back, get your notepad out, and let's get into the session. Good day, Ole. There are some folks here, which is good. And some popping in as we talk. 21 watching, that's great. All right, so for those of you who aren't here, in a minute or two, you can forward wind this first part of the video if you want to watch it in retrospect, which many people will do, given the time of the year. And so make sure to skip these first few minutes. There's one more minute to go. Skip a little bit ahead if you're watching on replay. Hello, Roy. Season's greeting to you too. Nice to have you here. I do appreciate everyone being here and making an effort to join the live stream. It's really, really cool of you. Thank you so much. Very cool people here. Daniel, celebrated Christmas, now celebrating market open. Hello, Daniel. Yeah, celebrating market open. 1 minute to go, and we'll start with the notes and get into the charts. I'm going to focus today on metals, of course, moving up gangbusters higher. And we'll talk about energies, natural gas, being a little tricky on Friday, but not too bad. And then, of course, stock markets reaching all-time highs, S&P, the NASDAQ lagging a bit, and we'll look at some of the stock names as well. So it's now time to start, folks. So I'm going to get straight into it. As I said, please do put up your questions if you've got any, and I'll circle back to them. Hey, TC. TC, you'll have enjoyed the song, by the way. I played it specially for you, the Whipsaw song. And the last verse was the verse that you like very much. And you commented in the private group about ignoring the news, stashing or trashing. I can't remember what it is. Anyway, trashing or stashing the news, putting it away, ignoring the news. The last verse of that song. Let's get into the notes. And I'll go straight into it. I'm going to actually shrink my face down a little bit to get me out of the way. Let's see how we can do that. Oh, no, that's too big. Let's go with a regular shape. Something like... All right, bear with me. There we go. Okay, I'm in the corner now. That's okay. It's probably easier to read. Now, let's have a look at the market overview for the 28th of December. That's today, Sunday the 28th. I'll put this PDF up in the private group too, like I did last week. And I'm going to read through it very quickly and pull out a few interesting aspects that might be useful and interesting. So global growth signals and macro news are slightly stronger than expected. We saw massive GDP in the US, and we're also seeing Hong Kong revising its targets up to over 3% as well. You can go to Reuters for these reports. So the bullish scenario for the markets in general is that Asian equities, as growth expectations improve, risk assets globally, et cetera, defensive sectors, if broader growth grows elsewhere, safe havens. Okay, I'm not going to worry about too much all about that. That's a bit of waffle. Equities still showing year-end strength. So this is what we want to get into the nitty-gritty here. US stocks extended gains through the holiday season. Behavior with mixed but resilient price action. The S&P set a new all-time high on Friday, even though volumes were a bit low. So keep that in mind. Low volume and big moves sometimes can portend a blow off top or a exponential parabolic final move, final bus, if you will. So low volumes, but with massive moves could indicate these are potentially blow off tops. I don't think they are, but bear that in mind, low volume. But it's the time of the year, Friday of the Christmas week. Volume was never going to be big. In individual names, Tesla, Nvidia, JP Morgan, Apple are in the buy zones. I'm long personally on Tesla, Nvidia, and I might get long on Apple actually, but I'm always a little bit reticent to get long on Apple for various reasons. So yeah, some of the names looking good, some of the tech names, although the NASDAQ's been lagging the S&P. I'm not going to go through the two scenarios. And then precious metals, what is going on with gold and silver rallying dramatically? We've been long most of the time on silver, long on and off on gold, sometimes short on gold actually, and we're now currently hedged. So I'm going to look at my hedge positions there, tell you how I plan to exit those hedges and try and get the next move on gold and silver, possibly still a little further up and then down thereafter. Yeah, so we'll come back to that. And then cryptocurrencies remain mixed and reflect structural transition. I'll talk about crypto separately, not behaving like the rest, but everything's gone gangbusters. As I said, gold, silver, stocks, S&P to new highs, and we've seen big rallies on natural gas prior to last week as well. So, and some of the other commodities. So everything's moving up except for Bitcoin. At some point, profit taking will take place on things like gold, silver, the S&P, Tesla, Nvidia, the Nasdaq, etc. And people holding those positions will be looking for a place to park those, or park that money, taking cash out of some of the metals perhaps and some of the other stock names where they're going to park it. Bitcoin's probably a pretty good candidate. Bitcoin has lagged not only the stock markets and the metals markets and commodity markets in general, but it's also lagged the liquidity that's being now injected into the system. And it doesn't do that for too long most of the time. And we'll probably find that Bitcoin, I suspect, not betting on it totally. But of course, I have to bet on it like everything else with risk management. But I think that we'll see outflows from some of these others at the top. And I'm not saying we're at the top on things like gold, silver, S&P, but when we do get there, and perhaps gold and silver are there a little early, we could see some flows out of there into somewhere else. It could be the Japanese yen, or it could be Bitcoin. I say the Japanese yen because there is a danger that the carry trade will unwind and that US assets and other things, not only US assets, but metals, commodities, once those start selling off, there's a real I just think there's a real opportunity for this to flow into crypto. I'll talk about it when we look at the chart, but there will be an opportunity at some point for these markets to correct and decide where that money needs to go. As I said, the yen carry trade unwind is another dangerous possibility, and that we could see repatriation of yen and yen-related assets, which could see an outflow of things like Bitcoin, stocks, gold, etc., into the yen rather than into cryptocurrencies. It hasn't happened so far, but maybe it will. I don't know. We'll have a look at those charts as well, the yen charts. And big banks. So yeah, JP Morgan, Goldman Sachs, and a few others are looking, seem to be pretty bullish. JP Morgan has signaled ongoing support for global equities into 2026 and calling for double-digit gains for developed markets and a risk-on institutional baseline. That's JP Morgan. Goldman Sachs, etc., have similar thoughts and ideas. You can read through all of the stuff that they put up on, on their websites and X and YouTube and wherever. All sorts of stuff going on. Keep an ear to the ground. X is probably the best place to look. Talking about X, we have an X channel. If you're not, and you can see we're live currently, we're actually streaming on X as we talk. But if you're not following us on X, go across to ArcisFX on X and just click the follow button there, because I post up, and so does Paul, quite a number of things through the week, articles, ideas, thoughts. There's a live stream. Actually, we're watching it. I'm watching myself on X over there. But we post up things on Bitcoin, cryptos, and all the other markets as well, natural gas, gold, etc., throughout the day. So go across there and join us on X. Make sure to subscribe, follow, whatever you have to do there. And then the dollar, we'll talk about the dollar when we get there. I don't want to carry on too much down this page. I'll put this up in the private group. I'm now going to switch across to the charts. Just bear with me for 1 second. I'm going to have to remove that and get stop screen. Give me 1 second. It's just a very clunky system, this. We should have the charts right here, right now. Okay, wonderful. Okay, I'm going to leave myself sort of stuck away on the left-hand side here for now. Maybe I'll put myself at the bottom, actually. That might be a bit better. No, I'll stick myself where I was. Just bear with me for 1 second. Not that one. All right, let's go with that. Right, let's have a look at the charts. Now, I'm going to start, as I always do, with currencies. We'll start on, let's start with the dollar index and see what the dollar is likely to do moving forward. And my general hypothesis on the dollar remains the same, that we should reach the bottom of this large, very large now, megaphone expanding, broadening pattern down here in the low 90s. We're heading down there. We've broken down through Dixie Moab. That was a very, very key, crucial, long-term support for the dollar. We broke down and we've retested multiple times from underneath and failed multiple times. You can see we got up to the 200-period moving average right there, retested it, and we've now broken down through all the moving averages and heading low. This is the day chart. Friday was a little bit, reversed up a little bit after making a fresh low, but nothing particularly bullish. A little bit of a gap above us there that might need to be filled. But overall, I think the dollar is gradually, not dramatically, but gradually drifting lower, and we should see this eventually reach down into the low 90s. If the dollar does move lower, we should see the other major currencies moving up, including euro, pound, potentially the yen, which would mean the dollar yen would move down, and then the Aussie and some of the others. I've only got two plays on, well, two plays really. I had two plays on, only one, but I got one in mind still. I'm short on the dollar yen, and this is not my favorite play. And I'm a little worried about two aspects of this, actually. First of all, that will keep on moving higher, and I've got short positions from there and from there. Not the largest positions, but, they cost me money every night to carry these positions because of the rollover and the interest rate differential. And thank you, Jazz. I had a great Christmas. Thank you. Just checking that everyone can hear me well. Good day, Eduardo, and everyone else. It's fantastic to see everyone here. Thank you so much for being here on this Sunday after Christmas and ahead of New Year's Eve, 2026 coming. We're talking about what might happen in 2026. So I think in the first quarter or first half, we should see the dollar moving lower. And with a bit of luck, we'll see the dollar yen moving lower in line with that. But we don't want to see it going down too fast. As I said, we might see assets which are now all very overstretched, including metals, stocks, not so much Bitcoin and other cryptos, but other assets are very overstretched. And if we do see an unwinding of the carry trade, that means some of those assets will be sold off to produce yen and yen-related bonds and treasuries and assets, and send all that money back into the Japanese hands, driving this down. But we don't want to see that collapsing like we have seen on this last two or three last carry trade unwinds. And when these occurred, we saw big sell-offs in the markets at the same time. Not to the same extent every time, but we certainly saw at least one of these, a massive sell-off in the markets, about a 15 to 25% drop. I think that was actually, no, that was this year. That was the tariff trade over here. So yeah, we don't want to see this collapsing, but I do want to see it moving down because I'm short. But it should be orderly and not be a panicky carry trade collapse. And the other one that I've been long on, and I think we could get a lot higher, I've taken profit on. We got long at the 20 period moving out. This is the Aussie day chart. And we've got a very large falling descending wedge with a spike low through the bottom. That was the tariff low sell-off because of the commodity nature of this currency, and bounced out of there, formed a base along the sort of 200 period moving average, this purple line, held it for ages and ages and ages, broke out through the falling trend line after one previous breakout, which didn't quite keep going. And the second one retraced to the 20 period moving average. That's where we got long. That was our signal to buy, and we got out at the top 200 period Bollinger Band. So yeah, I think this could move up still. If the dollar moves down, this is likely to move higher. And my target for the Australian dollar is 0.7 and then 0.72 or 4 in that region. So, a good 3 to 5 to 600 pips higher than where we are. But we have reached the top Bollinger Band. We made a spike low on Thursday, and Friday we just moved up back to that zone. So whether we'll carry on through there or not, I don't know, but I'll certainly be looking to buy dips. The first chance will be at about 0.6680. I like the 80s and the 20s, and that's at this previous minor swing high that we bust through. We've got a little bit of a fair value gap there. You can see this candle, this large one on Wednesday, has got no supporting volume surrounding it, particularly in the top half of this candle. So I think the top half of that candle might need to be just filled in a bit. So a little retrace to that 6680 would be great. No other trades on currencies. Now, I will come to natural gas and all the other stuff as we go along. So I know you're all chomping at the bit to get there, and I will get there, don't worry. But I'd like to do this in a structured manner because I also need structure in my presentation. And if I lose shape, lose structure, things can go all right. Now, here we go on stocks. All I want to say on stocks is that I'm still long on the NASDAQ. I've taken profit on the S&P, and I'm long on several names. We have nothing on the German 40. Let me go through what's going on. On the NASDAQ, we have not yet made a new high. We have not even made a new swing high. We have a quadruple top here at about 25,830, and that's a very important level. It's a quadruple tweezer top. It's going to be very difficult to get through. We've even started turned down a little bit on Friday without even attempting to get that high. At the same time, the S&P made a new all-time high and moved up fractionally above that previous swing high over there. We've now moved up. We're coming back. We're testing the breakout level as we speak. And what you would think that because we haven't collapsed back down again on the S&P, really important. We got through the all-time high. We didn't wick it. We didn't spike it. We didn't collapse immediately. We came back a little bit just to where we broke out from and held there pretty strong. In line with what all the other banks and asset fund managers in general, most of them, not all of them, some are pretty bearish about 2026, but in line with some of the bigger ones, I'm going to remain bullish on the NASDAQ and the S&P. I'll be looking for opportunities to buy the S&P early next week or even tonight, and I'm holding on to my long positions on the NASDAQ. Those long positions are shown by these green arrows. So 2 of them are in profit. There's a green arrow here too. Let's get that in front so we can see it. So that's a green arrow there. There's one there at the current price that we're trading at, and one from the long way down. So those 2 are in quite a good amount of profit. That one just about break even. Let's see how we go. I think we've got a very good chance of these moving up even further. And in line with that, I have long positions on Circle, MSTR, Tesla, Coinbase, and NVIDIA. On some of these charts, you can see where my entry arrows are. So I'll leave them there for you to have a look at. I'll expand this MSTR one because it's in the corner, a little bit difficult to see. You can see the numbers there. I'm not going to read them all out just to save time. And Tesla, we've got 2 long positions, one from very low down, one we just added slightly, a few days ago. It's turning down now, just after we added a fresh position. Coinbase, I'm long, looking droopy. So is MSTR, along with Bitcoin's woes. So Merry Christmas to you, Tamaz. And then NVIDIA, we got a long right at the bottom on that dip down to that previous low, and we simply bought that on speculation at the low. So yeah, we've been long on this. We actually got short there, eventually got out of that one at break even and didn't try to re-short it. And we've held pretty well, even though it's incredibly overextended, overvalued, all of the stuff that people are worried about with what they might think is an AI bubble. I'm not too sure. It probably is a bubble, but I don't think it's about to pop anytime today or next week or even in the first quarter of next year, probably. Now, let's go across to Bitcoin. I'm not going to talk about this too much, just to say that Crypto Paul will be doing a lot of crypto videos next week, and we are leaning slightly more towards the bullish side. I haven't adjusted I've got a 20% hedge on all of these, Bitcoin, Ethereum, XRP, and Solana. And I'll quickly try and position you as to what my thinking is. This is a pretty clear picture now on Bitcoin. We've got 2 potential flags. We've got and I've redrawn the flag to sort of, we actually have there are actually 3 potential flags. The first one is the flag that's in the top part of this rising channel. You can see the dotted center line in the middle. And the first flag was really in that center line. We broke down through the bottom and we're underneath the channel center line, which was the original, roughly, not precisely, the original flag. We're also below all the moving averages, but we're holding above this, what looks like a square, rectangular rather, potential bear rectangle too. So these are both bear patterns unless we break out through the top. First target is to get through the channel center line, then the top of this yellow zone, and then this angled channel top, plus all of these moving averages, plus there's huge amounts of volume just in this zone here. There's everything's lined up against Bitcoin technically and sentimentally, I think. However, when it comes to the fundamentals, I think that Bitcoin will at some point quite soon get a bid underneath it. If it doesn't, it's going to go down to potentially 74 or 65 or even into the 50s. I think that's how critical it is. Unless we hold here today, and certainly we must hold the swing low at 80,500 in order to prevent that scenario. It's possible we could dip down back down to 80,000, 81,000, double dip it, double bottom it, and bounce out of there. Right now, we've been traveling sideways in a very tight range, almost going nowhere for days and days and days, and still below the 20, 50, 100, and 200, and all of the volume traffic that's above us. So it doesn't look great, but I'm still long, and I will hedge the moment we break down, let me just sort of try and give you a schematic of my approach to this, or my strategy, which those in the private group already know. But basically, I will hedge more Bitcoin if we break down through this swing low, more if we break down through that swing low, and more if we break down through that swing low. So we've got 3 swing lows with higher highs. That's something, at least. So that's something. I'll take some positive from that. So 3 higher highs, but each one of them now acts as my hedge level. I'm 20% hedged. I'll add another 20, and then all of it if we break down through and hold below that last swing low. That last swing low is difficult to determine exactly what the number is, because some of the exchanges have a different number that was printed there during that weekend low. So that's it basically on Bitcoin. I will begin to hedge immediately and rapidly and readily if we start moving lower. You can see the same sort of thing. Ethereum has broken down through a bear flag and still below it, although we did try and we did actually reclaim it, and we're down below it again, so not great. XRP looks like a falling, basically a descending triangle, which doesn't look good. And if XRP does break down through the bottom of this descending triangle, the triangle target, the technical target, is all the way back down to $1. But if this is a big, massive bull flag, similar to what I showed you on Bitcoin, which is a potential bear flag or rectangle, well, this is like a bull flag or bull rectangle, a very large one, which goes back about, it's about 2 years old. But if we break through the top of there, instead of breaking down and following the descending triangle, that will take us up to about $7, $6.90. Technically, based on the flagpole, the flag, and the ascent equivalent to the height of the flagpole. So 2 scenarios for XRP. I'm not going to cover any more on Bitcoin today or cryptos, because Paul will cover those starting on Monday. And so we'll get his updates, being the crypto expert. Now, gold and silver. I think I'm going to come back to gold and silver. Let's do it quickly. Although I feel like, all right, let's do this first, and we'll go on to natural gas and energy straight after. Now, how high can we go? Gold and silver have reached new all-time highs, and I'm hedged on both of them. We were short on gold. I immediately hedged when we moved higher over there. And so I have a long position and I have a short position, and they're equal in size. So if you add those 3 shorts together, it's the same size added together, as this long orange position over here. So I'm fully hedged. That means I've got a long position, which I'm riding higher. I'm also bringing and dragging, kicking and screaming my short positions up along with it. When we get to the turnaround point, which should be sometime soon, it's not going to carry on going up forever. I thought we may have to move down before moving up, but we have moved fractionally higher, and we have some Fibonacci targets above us, which we have to reach. The first and most important one in my estimation, is at 4,580, and that's the 1.618% Fibonacci. We're currently trading at 4,530, so that would be 580, so only $50 higher. And then the next fib extension, the 2.618, is all the way up close to $5,000, about 4,946. That's also possible to be reached in short time. Don't think that we can't do that. And if you are holding a short, unhedged, and thinking of adding to your shorts as we move higher, hoping that we're near the top, that's pretty dangerous. There's a very bullish market, potentially going into an exponential parabolic blow-off move all the way up to $5,000. So I don't know what's going to happen. I'm hedged. And when I see very, very clear evidence, and there are going to be specific things that I'll be looking for, but very clear evidence of this turning around and moving down, and there's a set of parameters that I'll be evaluating for that determination, I will then take profit on the long trade, that's this hedge position over here, and add to the short positions that I'm holding and will continue to hold. And that means I'll add some profit on, quite a lot actually, and that profit that I've taken, I'll use to mitigate some of the risk on the shorts that I'm holding, and the additional shorts that I'll be adding at that level. That could be at 4,580, or it could be closer to $5,000. So we'll see. Because I don't trade with much or any leverage most of the time, it doesn't really matter to me. But, it's basically, I've got some gold longs and some gold shorts, and I'll take the shorts off at some point. Sorry, take the longs off at some point and get shorter. Or maybe I'll rebalance the hedge so I have a few longs but more shorts, like maybe 70% short, 30% long, something like that. The ability to hedge gives you great flexibility. Now, let's have a look at silver, because silver, we've been long on the whole time since, well, we've been long since $20, actually, $25 down here. And we rode this all the way up to about there, up to about 48. We got out. We got back in. We rode it up to here at about 63. We got out and we got back in. We rode it up to here at about 71 and some change. And I've now fully hedged my silver position. So all of these longs that we've been taking all along up until now has resulted in a final hedge. That means that I've got long positions on still, but I've also now got short positions on. When this turns around, and this is a very exponential move, and this is what makes me think that gold could actually keep on moving higher. Hello, Damajan. Gold could keep on moving higher, and it could be actually fueled by silver, which is normally the other way around. Now, how far could silver get? Well, let's have a look. I'm going to go to the weekly chart because it's quite a long way above us. Here's the weekly chart. We've gone through the 1.618 fib like it was butter. We got to the 2.618 fib, went through it like it was butter. And the 3.618 fib, which is the next stop, logically, not saying we'll get there, but we may well do that, and pretty shortly, pretty rapidly. The 3.618 fib is at $91, and then we've got another fib at $102. It's not impossible to believe that we could reach 91 or $100 to $102 in the next week or two. It's not unreasonable to expect that, given the exponential move that we're seeing. Look how far away we are from the trend lines, the moving averages, miles and miles down below us. When this turns around, it will drop rapidly, but it is not about to do that just yet. And further to that, Friday's candle is a shaven candle, a perfect shaven head and an almost shaven bottom with almost a tiny little fair value gap in between. The fact that it's a shaven head, no wick, in other words, means that tomorrow or tonight or Monday, depending on where you are in the world, what time you wake up. For me, it's in a few hours' time. This will most likely keep moving up. We may have a little retracement back into the top 10% of this wick on Friday, maybe 15% in, maybe as low as 38, the first fib, 38% down of the size of this candle, and then a move up is more likely than a move down thereafter. So don't be looking to get short on silver, particularly after what you've seen going on there on Friday with exponential moves. Not only silver, copper, and platinum. I don't trade platinum, not going to talk about it, but I do trade copper occasionally, and we've now gone short on copper at that potential double top swing high where we sold on that occasion. We sold that top previously, and we bought the bottom. We faffed around here. We've been basically hedged since here, actually. So I had two shorts there, immediately hedged once we moved above the 20-period moving average, the green line, immediately hedged it. That means I have a long position on copper right now. I've kept the hedge on, and I've added a short position onto the entire hedge position. So that means I'm now hedged, but weighted short with one position at the top here at this potential double top. If this moves higher, I will hedge that additional short position. It's only 10%. I'll hedge that too. And there's almost no risk on this additional trade, considering the rest of it is safely hedged. At some point, if this starts moving down, I'll take profit on the long. That's this orange trade. Hold on to that short, hold on to these shorts, and potentially add some more shorts to this existing 10% at the potential double top. I'm not saying it is a double top, but it might be. So that's metals. And I will circle back to those if need be. Now, natural gas. Let's have a look at this. I will come back to the other energies shortly. And I'm going to look at the futures chart here at, no, that's Pepperstone. Let's have a look at the futures chart. Just bear with me. I want to get the FXCM chart, particularly, maybe it's under nat gas. I hope I haven't lost it. Bear with me. It's really important that I find this one. Futures. NYMEX. Ah, damn it. All right, let's just go with this. Let's go with the Henry Hub futures. It doesn't matter. On this 4-hour chart. Okay, so I'm basically trading these Henry Hub futures. I'm now out of the market. I'm going to tell you what my ideas are. I wish I could find that chart. I'm gonna have to find it. Sorry, folks. This is going to be incredibly annoying. Is that it there? Or is that Pepperstone? I'm sure that everyone's desperately all. I'm sorry, folks. I don't know why it's disappeared. Where is FXCM? All right, we're going to have to go with this current chart. All right, so I'm going to go with this chart here. This is actually at Black Bull Market. Sorry about the delay. We're right back. So this is Black Bull Markets. I'm actually, the reason I didn't want to use this chart is because I'm not trading. I've been trading at FXCM because they are rolling the futures over into next week, and so we didn't see the last moves on Friday. I'll go to the other chart over at NYMEX, the Henry Hub chart, shortly. But as you all know, we basically got short here. We got hedged there. I haven't got all my arrows on. It doesn't really matter what we did in the past. What we're doing now is important. So we got long at these 2 green arrows, and I got hedged. I got out at the top there, basically hedged. Let's just have a look at see what happened on this one here, Henry Hub, and let's see how we closed on Friday. Once again, this is the 4-hour chart, and you can see where we got long at the bottom there, and got out or hedged. I can't remember now. Over here, I think I took profit. Let me just have a quick look. I've been out and about today on the beach, so it's been difficult. I just sort of haven't been. Yeah, we're out of the trade completely. So I just opened up my trade station. I thought we may have hedged it. So yeah, so we have so out of this position. So we got long there, and we got out at the 200 period moving average, and now we need to decide what's going to happen next. So let's have a look at this chart. I generally think the natural gas is going to move higher, and that we're going to move into a higher range overall, and that we're probably unlikely to get below $3. We're not anywhere near $3 at the moment. We're at 437, but $3 is down here, and we have a little gap over there, which is a rollover gap. We don't have to worry about it too much, but it may just need to be filled, which might need another little drop down to 375 or 350. I was hoping we would get to 375, but we only got to 380, and we got long at 380, a little premature. And I thought we could get into this order block and these moving averages. So this is the NYMEX Henry Hub. And my idea now is that we should be looking for longs, but I don't know where to look for them. It could be at this zone that we're currently trading at. This is the day chart. What worries me about this is that we moved up, we came back down. We didn't get quite far enough in my estimation. There's another swing high, the 200, the 100 period moving average, the 350, 375 levels, and this rollover gap. And I don't think, and there's another little gap there, I think we've just filled that as well, actually, that's fine. But I don't think we quite got low enough. And what happened was that we bounced up, we got up to the 20 period moving average here on this day chart, rejected it quite sharply with what almost approximated, not quite, but almost a piercing pattern reversal. We didn't get more than halfway down through the previous bullish candle, and we held the 50, so not quite bearish, and we bounced off the 50 there, but we're still below the 20. We still have that wick high. Now, if we look at the 4-hour chart on this one, it also looks like, it looks like we did reject there. We have a double spike high, almost a tweezer top at this confluence of the moving averages, which is equivalent to the 20 period on the day chart, rejected, and we've now moved up. We haven't got above those levels yet, so we're still below the 200 and the 100, although we're above the 20 and the 50. So I don't know. Personally, I think we may have to go a little bit lower. If we gap up over the weekend, if the weather forecasts and models look good, which I think they might do, and we'll do the final run in the next couple of hours and have a look at those numbers. And I'm looking forward to some of those numbers from those of you in the private group. Thank you very much. We'll have a look at that in a couple of hours' time. But when we rerun those models and forecasts, we're going to see or anticipate which way this might move at the market open. If if it looks like there's going to be more heating demand, we may gap higher. And if we do gap higher, I'd hope that we'd gap above the 200 and the 100 and even potentially the spike high swing high. And then that would put us in good stead. We get above that little point of control as well. I'm going to put a Fibonacci analysis from the top to the bottom and have a look at where the fib levels are. So you can see we're at the 38 right now, rejected the 38, almost got to the 50 actually. So we haven't even got through the first two fib levels on the way back up. And we've seen some resistance, hesitation, difficulty to get through there at the moment. So my feeling is let's wait for this market to open up in a couple of hours' time. Well, actually, 4 hours' time from now or so, see what happens, and then make a decision based on that. If we gap up and close above that wick, double wick top there, and hold there for at least 2 candles, I suppose, so not the first 4-hour candle, but the next one, which would take us into the early Asian session and the European session tomorrow, and hold there during those couple of opening candles for the week, then I think we can get long. But if we don't do that and we, gap up and then dribble down, or we don't gap up, or we just gap down instead and start moving down, I think we're going to get below 380, and I think we could get to 375 or 350, and into this order block, the gap, the other moving averages on the day chart. Let's go back to the day chart, and just this zone down here where there's proper support. We bounced out a little bit early, maybe a little bit optimistically. We did get down to this market structure break though, and this is the exit or departure point for the move up. So there's a bit of support there too. Let's see how we go. I don't think I can add much more to that. I don't have a position on it, so I've got no skin in the game. And if we don't move up and we move down, I won't be getting long for sure. And I think the only reason I'd get long immediately at the market open is if we gap up straight away and start moving higher. So that's my feeling on natural gas. I'm going to read some of your comments on that shortly and come back to that. And at the same time, while we're on this page, we must talk about oil. And this is kind of boring, really, because we're just short. We got short there, got out at the bottom. And I shorted again at the 50-period moving average here on the day chart on WTI. That was on Thursday, a little doji candle right at the 50-period, like it often does, over there, over there, over there, over there, every time we get to the 50, actually, unless we go through it. But a lot of the time, we react just to the 50-period, and we did that on Thursday, and then on Friday, a big collapse down. Again, a wickless candle, almost, which is incredibly bearish for oil. Although, have a look to the left-hand side. The last time we got an almost wickless candle, several of them actually, was these 3 black candles here, and they did actually reverse to the upside. Doesn't mean this one can't just get bullish on Monday and do a white candle like we've seen before. But so far, so good. And we're short from, I don't know, $58, maybe a little bit higher, 58.50. And we're currently trading at 56.50. So we've got a few dollars on that trade, which is excellent. About 5% on oil, and a 5% move on oil is pretty good. I'm also long on URA, and it hasn't moved much in the last 2 or 3 weeks, really. So we're long there, looking for this to move up. No great shakes there just yet. And lithium has gone gangbusters along with all the other metals. Now, uranium is a metal. It didn't go up like the others, like gold, silver, platinum, palladium, plutonium, lithium, all going crazy. And lithium has had, it's more than 3 white soldiers now. 1, 2, 3, 4 white soldiers, gapping every time. And I suppose we're going to have to come and fill those gaps at some point. But so far, so good. We're long from $58-ish, and we're currently trading at 67. So almost $10 on that trade, which is about 18% or something like that on lithium, which is a massive trade for us. All right. I'm going to circle back to some of these things in a minute because I'm sure there'll be some questions because I am rushing through a wee bit, but let's have a look at softs and grains. Not a lot to say here, really, except I'm short on coffee, long on wheat, talked about lithium, long on sugar. A lot of these are moving up quite nicely. Let's just scan through these charts quickly. So sugar, just to give you the overall sort of synopsis here, is that we've moved down, tried to bounce off. It's really cheap at the moment. I've got 2 long tranches here. We're at about break even or slightly better at the moment. I'm looking for this to break up eventually through this longer term trend line and start to get into a different angle. I think we could get something like, I don't know, one of the higher angles. If you use Gann angles or Fibonacci spread angles like this, you'll be able to determine that more accurately. That looks about right. So something up into that region, maybe. As this line falls down, it'll get lower and probably end up in this sort of, I don't know, 20 to 22 cents per pound region, something like that. So long on sugar, long on wheat, and wheat just keeps on doing wheat stuff, just being incredibly annoying. Although maybe we've got a chance now. We bought the triple bottom. We got out at the top there at the gray arrow, and we bought again on the return to the falling trend line, and we bought the breakout. That's the breakout up to the gray line. There's the breakout, the pullback, and we got long at the green arrow. That's the breakout pullback trade, or BOPB. Those of you in the private group will know what that is. So that's softs and grains. And then there's a few things on here. Rand, I'm now out of the Rand. I took a loss on this trade. Been trying to buy this pair since that smiley face over there. And we held it. And eventually it broke down through that trend line and I got out for a loss. So I'm allocating that money elsewhere. I don't think I'll be trading that anytime soon. The Rand is particularly strong for a variety of reasons. And it's certainly not for political reasons. Definitely not for political reasons, but certainly for other reasons like oil and gas and massive rallies in metals. A lot of platinum, gold, uranium, all comes from South Africa, caused by apparently a meteor, the largest meteor that ever struck this planet, or one of them, which hit near Johannesburg and had loads of palladium and platinum in the meteor, which is now under the ground there. Interesting. So that's all of that, folks. I'm going to circle back to the questions now. I think I've covered, we're talking about the Rand. I'm going to talk about Bitcoin dominance, and treasuries. Yeah. Oh, yeah, we do have a long position on TLT. And every time I do this, I regret it. And I still have regretted it once again. Will these treasuries eventually get off the ground? Who knows? Yields have not really risen much. We've been going sideways for a long time. But treasury price has dropped somewhat over this last number of weeks and even months. All right, so that's that, folks. I'm going to try and get through back to some of the questions as if I can, and just say hello to some of you and say Happy Christmas to many of you who I've not greeted just yet. Eduardo, thank you very much. I appreciate that. Coin becomes interesting. Consolidation about 235 or 250. Or could we fill the gap and go down to 200? Let's look at coin, Emil, quickly. Coin, yeah, I don't know, man. I don't know. We're at 235-ish now. Are we going to fill that gap? That's your question. Probably, I suppose. I don't know. Depends on what Bitcoin does. Of course, it's all Bitcoin dependent these days. And as Bitcoin is not doing very well, most of this other stuff isn't as well. Now, that gap down below us there is not really at any other clear support level. It's at about the top of the gap. We actually reached the top of the gap, by the way. That swing low on the 21st of November reached the top of the gap. The question is, do we need to reach the bottom of the gap? We don't always have to get to the bottom of the gap, but we might have to. And that's down here at about 213. And below there, we've got, there's the 200 level, and so on. Big rounds, and I'm sure there are all sorts of gaps to the left-hand side here that I haven't examined properly. But there's the major one. We reached the top. Can we reach the bottom? Maybe, but I'm still long on coin, and we'll see how we go. I don't know. I just don't know. I think if Bitcoin gets going, this will find support. If Bitcoin doesn't get going, it won't, and probably have to go lower. I think it's as simple as that. Silver. Yeah, we talked about silver. Marco Polo. Is there anything else you'd like to ask about silver? Specifically, if you've got anything. I've now lost my place here. There we go. All right, so is there anything you'd like to ask me, Marco? Jazz, good morning. I had a wonderful Christmas. Thank you, Jazz. I hope you did too. Hello, Sean. Lovely to see you, mate. Have a good Christmas too. Rahul, season's greetings. Not everyone celebrates Christmas. Of course, many faiths don't, and Christianity is not the largest faith in the world anymore, I don't think. So not everyone does it. Thank you, Will. Nat gas gap up at the open. Maybe. Merry Christmas, Tomas. Lol, what are you laughing at, GSC? North America is freezing during the weekend, and though we have an EIA report lined up. Okay, wonderful. We're going to talk about it in the private group as soon as we finish here, or a little bit later on today. Neo Rock, Merry Christmas. Hi, James. Merry Christmas. And to you as well, Neo Rock. QR code on the stream covers the stock symbol you're reviewing in the full screen chart. Would be great if you can move your QR code or add watermark on canvas to show the code. Okay, Neo, I don't know how to do that, mate. I'll ask my team, though. I don't do all the QR codes and stuff, but I'll ask someone who knows how to do it. But actually, that QR code at the top left-hand side of the screen is the code to join the private group, and there's a discount on that at the moment. So if you hover your phone, and you can do it at the bottom right as well on your screen as you're watching right now, top left, you can scan either that one or the one at the bottom and get a discount on the private group. So go and do that now. Just do it. Right. Now, all right, where are we? Difficult. It's easy to get lost on these comments. America's freezing. We did that one. We talked about Singapore. Not so smarty, yet not so stupid. I like your name. Happy holidays to everyone from Singapore. It's still warm, of course. Always warm in Singapore. Damajan, nice to see you, mate. The Aussie is strong. Mining, yeah, similar to the Rand, Damajan. All to do with metals and not only metals, you know, other things too, rare earth minerals, and agriculture products, and the kiwi, yeah, nat gas. Search for N-gas. Okay, N-gas. Thank you, Sebastian. Silly Billy, you're right. Widowmaker keeping us guessing. Nat gas. I tried nat gas. No, doesn't. NG1 Shriek doesn't work. NYMEX, yeah, that's the NYMEX one. A little behind. Another gap at $3. Yes, there's a little gap at $3. Anyway, N-gas. Let's have a look at that while we're here. Let's go to the natural gas chart. N-gas, not just, okay, there we go. I think that's good. There we go, wonderful. Okay, let's have a look at this chart quickly. This is a better chart. Thanks so much, everyone. So here we go. Let's just go back to natural gas. This is the chart that I was trying to show you earlier on FXCM. So you can see all the positions that we've taken, and we took our longs at the bottom here, and we got out at the top there at the 200 period moving average. I should have an arrow on there, actually. Let's put a black arrow on there so to avoid confusion. That's a black arrow. It's not a hedge, so it's an exit. So that's why it's black. So we got long there. I had a hedge position from there, and a hedge, sorry, a long from there, long from there, long from there, and a hedge position there. And we got out of it all, and we're out of natural gas. Now, what is going to happen? This is the actual chart, the way it finished off on Friday. And you can see as we compare that to, let's just have a look at the N-gas F chart. That's the top right-hand screen. This is at Pepperstone. Sorry, not at Pepperstone, at Black Bull. But this one has not moved down because Black Bull is now only open to closed trades because they rolled over this week. So there's no price offered for new positions. This is what it looks like on the futures at FXCM. This is trading the futures price from the Henry Hub, NYMEX, and this is where it looks. So what are we going to do here? We've got a little baby. I'm going to get rid of this megaphone because it wasn't, it's now been invalidated. And my thesis or my theory is that this entire move up is an impulse move. There's a little gap at the top there, by the way, on FXCM. That little red arrow, that black candle in the center is not a candle. It's a gap which has not been filled. And it's not only a gap, but it's a weekend gap. So that gap is still open. And if you look at this on the NYMEX, you can see it's still there. And I'll show you here on the NYMEX quickly. The NYMEX 4-hour chart. Is it there? Is it there? No, it's not there. It's over here. Here we go. On this chart, you can see it. This is the futures chart at Black Bull. And that's the gap there that you can see at the top of the FXCM chart. It's a clear gap. It's a weekend rollover gap. Okay. It has not been filled, and it's likely to have to be filled at some point. Let's go back to the FXCM chart in gas. Thank you very much for pointing that out. So that arrow there, that candle, that arrow is pointing to a black candle, which is actually a gap, which may need to be refilled. We've also got a trend line, which we broke down through, which we may need to retest from the underside. And notice now that this takes us very close to where the gap is and also into this order block. I think this is an impulse move up, and this is a corrective move down. And the next move, if that is correct, will take us to an even higher price or at least potentially a double top or somewhere into this region. The only question now is where to buy natural gas, and are we at a bottom right now, or are we likely to see a further drop before that? As I said to you before, we've got a fair value gap right here in the center of your chart over here, this massive candle that broke out through the resistance level at 356. That's the breakout level on this impulsive move. It's also a fair value gap, which probably needs to be filled. And the breakout triple top over here has not been retested. And we came short. We stopped prematurely before reaching the business zone, the important part, the triple top, the gap, the fair value gap, the gap in volume between 2 points of control. We didn't get there. We bounced out prematurely, came crashing back down on Friday. And now it looks to me like we may have to retest either 350 or 375 just below us. Did we get to 375? We actually did. We got to 375. So we've reached the first target. That's excellent news, but there's still this fair value gap, triple top, and potential to fall into that little valley over here in between the points of control. Right there, empty valley, value of desolation, fair value gap. Always the market will be eyeing that to return to it. So yeah, I think it looks like we're going to get down to 355, maybe 350, and at a push, if things go really bad for natural gas, and if the weather warms up and there's no demand at all, we'll probably go all the way back down to $3, and that's quite a long way further down. But I think for my money, that level where the big black line in the center of your chart is at 355 to 350 is probably where this market will want to go. I don't know though, and I'll be observing at the market open. As I said to you before, if we gap up, close above some of these moving averages and hold them for 1 or 2 4-hour candles, I'll potentially look to get long, and then consider the 375 level, the very key multi-year 375 pivot level on natural gas. I'll consider then that to have done its job and to have held, and then be looking to get long. So long explanation there on natural gas and everything else, but I hope that was... How embarrassing. Stop spamming, Tanil. Don't worry about that. It's Nightbot. Ignore Nightbot. It's just keeping you all in check. Hi, Martin. Always nice to see you. How do you share the link from TradingView? I'm not sure. Temperatures getting colder. Yeah, sure. All right. Oh, this is a private conversation with TC and Damajan. Azmi Usman, nice to see you too, mate. MT CL3WX, happy holidays. I rarely discuss the VIX. Yeah, let's talk about the VIX. I don't talk about the VIX much, MT, but I do occasionally, and we'll talk about it now because you brought it up. Here's the VIX. I only trade the VIX very occasionally, once or twice a year, and I wait for it to get into the green block, and I look for it to get close to the bottom or halfway down the green block, and I get long, and I get out as soon as we get in, a big spike up into about 20, 30, 50, something like that. These move so fast that when it gets there immediately, and you can get out and take your profit. But I only get in when we get into the green block. We are now entering it. I think I'm looking for something like this. I've said S&P bears not allowed just yet. I don't think we're going to see this moving up in the next month or two. But, let's give it towards the middle of the year, and maybe that's what will happen. I don't know. But we are entering the green block for the first time since we were there in December 2024, a year ago. So it's been 1 year since we got into the green block on the VIX, exactly 1 year. Prior to that was in June, 6 months, half a year prior to that. So from there to there, 6 months, from there to where we are today, 12 months. And maybe it's the bottom. Who knows? Anything's possible in these markets. Markets are fragile and thin over Christmas, and we could see weird stuff happening. I'm always open to it, always ready for it, always prepared for it, and hoping that it doesn't go weird. But if it does, I'm ready for it. Okay, folks, I hope you had a wonderful time here in the live stream. I'm going to finish now. We're a little early, actually. Only 52 minutes today compared to our normal hour and 10 minutes or 15. But I hope you enjoyed it, everyone. Have a wonderful rest of the weekend, what's left of it. And next week, New Year's Day, set your New Year's wishes and promises and plans and objectives, strategies for not only your trading, but for your personal life too. Make sure that you tell someone that you love them early in the year and do something kind, be nice to people. And I think generally a good idea is just to say, I'm going to be really nice to people in 2026. I'm not going to be a dick. I'm going to be a happy and pleasant and kind person. That's a good way and a good resolution to make. I think that's going to be one of mine. Sure. I've got a few others too. Take care, everyone. It's great to see you. And I will see you next week in the regular videos. Make sure to tune in for Crypto Paul's updates on crypto starting tomorrow, I do believe. And members live stream on Wednesday and all sorts of updates during the week. Yeah. All right, folks. I'm going to love and leave you, and I'll speak to you in the next video. I'll speak to you then. Have a great evening. Take care. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.